What's going on, family? How y'all doing? This is episode 18 of the Pharaohs Podcast. I'm your host, Solomon. I am joined today by, well, Israel might be running late, but we still got a doctor in the building. So I'm joined today by Luke.
What's going on, everybody? What's going on?
What is going on, family? Today we got a special guest for y'all. We got a special guest for y'all, and I'm going to bring her in. She is one of our finance gurus. Let me bring her in first before I introduce her. Oh, wait. Hold on.
Hello, hello.
Hey, what's going on?
How are you?
I am
Good.
doing well. Oh, hold on. Wait, hold on. Hold on.
What's
Wait a minute,
good?
family.
Can you
We
hear me?
got Israel.
Oh, what's
Israel
good?
came into the building. What's up,
Yeah,
Israel?
I'm up here at work. So yeah, getting to the money while it's quiet before the storm happens.
The calm
Yeah,
before the storm is a plus.
Absolutely.
I'm hearing the same thing. Yeah, so it's gonna be a big little thing going on down here in Atlanta. That we gotta worry about this hurricane. Hurricane Francine? Is that what it's called?
I
I
guess,
I
and
think it's Francine. I read a little bit about it. Well, I saw it in passing, not read it.
that's why we got all this rain now.
Yes.
I'm not a fan.
Well,
That's the
family.
disadvantage of living in Atlanta, Miami, all those places that have those lovely hurricanes.
Yeah, I'm new to it. It's my first one. But family, before we continue the conversation, I want to introduce our guest for today. This is I'm going to call her our financial guru, our the princess, the queen, the empress, the one who is going to share information today with us, family, about life insurance and getting our finances together for our success in life, Miss Brenda.
Hello, everyone. Thanks for having me.
Thank you for joining us. So I just want to just straight off the top, tell the people about yourself and all of the services that you have.
How long we have for this meeting?
Uh, you got the whole first half, and this is all you.
So I'm Brenda Porter, everyone. I'm the owner operator of KWL Financial Services. It's a legacy for my family. What I provide is peace of mind, and I give families peace of mind protection to when you or your loved ones pass away. You're secured. You don't have to worry about GoFundMe, car washes, fish fries, fundraisers. You secure all of that up front. um, for anyone that you love, you wouldn't want them to have a financial crisis, or I would assume you wouldn't want them. If you died tomorrow and you have children, what do you think they're doing? They're grieving. They don't want to grieve and worry about how I'm going to put my mom away, how I'm going to put my grandma away. These are things that you plan ahead for. The false perception in life insurance is why a lot of people steer away from it, is because people think it's a death benefit alone. Life insurance can be much more than a death benefit. It can be an asset to you, to your family, to your loved ones. You can use these benefits while you're living. Perfect example: if you had a stroke or heart attack and you're working, everyday working class person, you have a stroke or heart attack, what's the first thing that happens?
Um,
You off
First thing,
work? Hey,
yeah,
You off
you at
work,
home?
right?
yeah.
So what happens? You lost that income, right?
Mm-hmm.
Your bills didn't stop coming because you had a heart attack or stroke, did it?
Nope.
Nope.
So if you can't go to work for 6 weeks, 8 weeks, 12 weeks, then you're putting yourself at risk for an eviction, foreclosure, things like that. So life insurance has this product called living benefits. That's where you can access up to 75% of your life insurance policy up front to pay your bills, live comfortably, not have to worry about I need to recover or I'm getting discharged with drain tubes and I can't walk, I can't do this, I can't do that, but I got to work or I'm going to lose my house. No, you activate your insurance policy. You call your agent and say, hey, I can't do a few of my ADLs and I want to access my living benefits. Insurance company sends you a check, problem solved, no financial crisis. And you now have peace of mind because you were an advocate for yourself and you invested in that life insurance policy and it helped you while you were living, plus left money behind for your death benefits for your family later.
Wow, that's a lot. That's a lot to digest. Where y'all want to start at, fellas?
Called peace of mind. Having a peace of mind, you have to invest in the right products. Now let's fast forward. I know CJ, you don't have kids, but saying for instance you had the baby. Let's use Kyrie for an example. He has 2 little ones.
Okay.
He get a life insurance policy on his kids. When they 20 years from now, you do a 20-year plan. 20 years from now, they're in college and they need money. You're not calling the government saying, hey, I need to borrow X, Y, and Z, have a student loan debt. Many, many years later, you're calling your life insurance policy and you're activating that cash value. And you're writing a check for your kids to go to college. That's the difference between having a life insurance policy or peace of mind protection plan. And you can go even a few steps further and do like an IUL, which is an index universal life policy where it's going to build cash for your retirement. At age 65, when you get ready to retire, we can even go 59 and a half because that's when the government don't tax you. And you can start setting up your retirement now. I would say 70% of our individuals, when we retire, myself included, because I was not doing financial services 30 years ago. When I withdraw my retirement benefits, I'm going to run out of money in about 20 years. And if the inflation keeps going, I might run out of money in 15 years. So that's where you start investing now, as little as, I'm not even going to lie and say $50 a month, because that's a lie when people say you can put $50 a month and save for retirement. You got to at least start with $100 if you're over 30. Now, if you a newborn, $25, $50 is going to carry you through. But over 30, you need at least $100. You need to be aggressively investing into your future so that you can know at the age of 80, you're not waiting on that Social Security check. You're not waiting on retirement money that's pretty much gone. You have that money set aside to live comfortably for the rest of your life.
Wow. I like that breakdown because I'm 31 years old, so
Now's the time. And you know what they say, a leaky roof, if you wait forever to fix a leaky roof, it just gets more and more inexpensive. If you wait forever to buy life insurance, it's going to get more and more inexpensive because life insurance goes on your age and it goes on your health factor. And they're not going to give you $1 million policy if you're 90 and you got arthritis or you got high blood pressure, you're diabetic and things like that. The more illnesses you have, the more the policy is going to cost. So now is the time to execute. As soon as you hit graduation from college, and if you don't have that policy and you work and pay yourself first, and you pay yourself by investing in a life insurance policy. And today, a lot of people don't know this, but Walt Disney built Disney World off of a life insurance policy.
That's crazy.
You can Google it and see the whole history of it. When the Great Depression hit and all the companies went under, Montgomery Ward's was one of the companies that stayed alive, and they stayed alive because they had an insurance policy that kept them afloat.
Wow.
You got to learn your history on insurance. And it's a lot more. That's just a few that I know. It's like tons of people that survived off of life insurance.
So what would you say to like you say, you gave the example for me, but so two working men like Israel and Solomon, they young working men. What would be a financial what would be your approach to introducing them building a financial portfolio outside of just life insurance, all the way down, life insurance, of course, health insurance, car insurance, homeowners or renters insurance. How would you come up to a young man like these two and really kind of break down the benefit of them having these type of things set in place before they may start a family or take on other responsibilities in their future?
First and foremost, you have to do a budget. A good agent needs to sit down with a client, go over financials, goals, bills, and things like that, because you want to make sure you can afford it. Everybody that purchases life insurance policies, there are some people out here that really can't afford it. And it kind of is a moot point to invest today, and 3 years later, you can no longer keep up the policy. You're just throwing money at the wall and, light a match, it's gone. So you figure out what the budget is, and then you create a plan that matches that budget. You can always add on later, but to start off, you would start off with a whole life policy for an individual that's working with kids. If they have young kids, you will also add a term life policy to cover the kids from 0 to age 25, because you figure from 0 to age 25, that kid is not able to take care of themselves sufficiently. So you want to make sure you have a lump sum of money if something should happen to you before your child turns 25. Whatever your health factors is, you want to get like 200,000, 300,000. So if you died today, your kid is 15, they got a starting point of $200,000. They're not struggling or left behind to worry about what they're going to do next. And as a homeowner, you should also have a asset protection plan to cover your mortgage in the event that your spouse passes away, husband and wife, you're paying a mortgage with two incomes. If you lose one of those incomes, it's going to create a financial hardship. So you want to make sure you have a term policy for the 30 years that that mortgage is in place. If anything should happen, that term policy will cover that mortgage, and your wife or your husband won't have to worry about paying the mortgage if one spouse passes away. And the same goes for kids. So people speak in term life policies because it's cheaper and it's cost efficient, but you have to go into it knowing the reason why you're getting a term. You're protecting the asset, or you insuring your children's future if something should happen to you before they turn age 25.
Now, what happens after 25? Like, does that policy just like can you take that out for cash value, or does it just go away, or you just create a new policy?
Term has no cash value. Term is for the specific term. You can do a 10-year, 15-year, 20-year, 30-year term. How to save your money on a term policy is you do a return of premium term. Everyone can't afford it, but it's an option out there to say at the end of 30 years, you get a return of premium with 5% interest. The other option is at the 25th year of your term policy before it expires, you sit down with a financial advisor and try to convert that term policy into a whole life policy. Once that term policy expires, it's done. There's nothing you can do about it. That's just money pretty much lost, but it was protecting the asset that you were protecting at that time. It's like your cell phone insurance. If you get cell phone insurance and you never use it, that money's gone. Car insurance, you get it for 6 months, you never use it, that money's gone. It's a term specific for the need.
Hmm.
And
So
that's
does
what
it differ?
agents don't explain, that they sell people term policies because that's what
Right.
they can afford, but they don't explain at the end of this term, you no longer have insurance. So what's your end game here? Do you want to return a premium term? Are you just getting the term for the specific time because that's all you can afford? What's your plan after this term? If I'm 40 and I get a 30-year term, at the age of 70, my policy is expired. At the age of 70, what type of insurance do you think I can get? What type of insurance do you think I can afford? I probably can't afford any insurance at the age of 70 because it's going to be $200, $300, $400. So you have to, educate your client at the end of this term. What's your plan? What's your goal?
So at that term, the return on premium, what exactly is that? Like they give you money back,
The
or
return of premium, if you don't use it, you get everything you paid into it plus interest. And that
and
gives you the opportunity to do a single pay policy. So Say you're age 70, your policy is about to expire and you had a return of premium. You probably got like $30,000. You can do a $20,000 single pay premium to ensure that if you passed away, that that policy will cover you. And then we also sell a policy called Assure for Life. It's a service plan that covers funeral services, no burial. It covers funeral services and cremation, where for individual, it's $30 a month, or you can do a family of 7 for $85 a month.
It's not bad.
And it covers transportation of the remains if they die in a different state, like saying I'm in Arizona, all my family's in Illinois, I die in Arizona. It covers the remains of my body to transport back to Illinois. And the policyholder, it gives them a round trip airline ticket to attend my funeral. And all of the funeral services is covered except the burial, and it's called Assure for Life. Now, that policy, you can get up to age 80. There's no health questions. Everyone qualifies except for a person that's getting dialysis and a person that has active cancer. Those are disqualifying for that product.
Does it differ from every state? Does it differ?
No, it does not. So that's a family plan. That's an option for people who can't afford insurance, for people that have term policies. It just covers your whole family, that if someone dies, that funeral service is paid in full. No questions asked.
Now, what's the process for that? Let's say the person died. Do you need like a death certificate, or you need does it have like a point of contact to contact as some?
As soon as that person dies, you call that 1-800 number. You let them know a person on your plan passed away. They're going to ask you, do you have a funeral home in mind? If you say yes, give them that contact number and they'll take care of the rest. If you say no, they'll ask you what's the zip code to where you want to have the services, and they'll contact the funeral home and then communicate back with you to get your approval if you want to use that funeral home. And then everything else is processed.
Okay.
And that application and process takes roughly about 10 minutes to complete. You make your first 3 payments up front and you're done. Just as long as you pay your premium every month, you have that policy. You have that peace of mind of knowing that your funeral services or cremation is covered 100%.
And this is what your company does, KWL.
Yes. So KWL is a brokerage. I don't own any insurance companies. I'm contracted with several insurance companies to get my client the best product for their needs.
This is great, family. I hope y'all enjoying this conversation with Brenda. She is coming from, like she said, she's actually in Arizona right now. We doing 3 different zip codes right now. We got Luke in Chicago. You got Israel and I. We here in Atlanta, and we got Brenda out there in Arizona doing this work for us. This finance services.
The reach is expanding.
It's expanding.
Yes, we expanding our reach. There we go.
My question is, outside of the life insurance, do you all do any other type of financial services that you can help the people with?
We do a lot of financial services. So it depends on what you want to do. We do investments. We do 401k rollovers. So if you know someone that just retired, and regardless to the dollar amount they have, they can roll over it into their own IRA account, and it pays them a monthly stipend, and it just ensures that they don't run out of money.
Okay. See, now we might have to put you on the second part, because I want to go deeper into the investing in the IRAs, because I believe that is something also that people should start getting into sooner than later.
Exactly. And then, like, if you worked multiple jobs and you was invested into their 401k, that money is sitting there. You need to call up that company and say, hey, do I have any 401k? Do I have any 403b? Do I have any, profit sharing with your company? I want to roll that over. If you cash it out, you're going to get double taxed. If you cash it out before age 59, you're going to get the tax for cashing it out. Then you're going to get that 10% penalty. So what you need to do in that instance is get with a financial service provider, someone such as myself or a business partner, open an account, say you want to roll over your 401k, you want to roll over your 403b, you want to roll over your IRA into an account that you control. It grows, it gains interest, and it pays you a monthly stipend at the age of 59 and a half.
Yeah,
That's I think that's something a lot of people would probably could appreciate. Especially seeing as how times now, financial planning is becoming something less and less spoken about. So to like a generation now, it's election year, it's a lot going on. The market is very interesting. Prices are high. How would you convince, or how would you, really sell over to maybe a new family, a young family, maybe in their 30s or late 20s? How would you express to them the importance of having these type of financial amenities set in place outside of course, we know the common just as a peace of mind,
We
but
do
like, how
training
would you?
classes.
Yeah, I was gonna say, yeah.
I
What?
send this book to clients. Sometimes it says Money, Wealth, Life Insurance. You can order it on Amazon for $8. Like people that's uncertain and unsure, I just give them, like books to read. Like grab this book, go read it, and educate yourself on why you should do certain things, or don't just take my word on it. Go search for yourself and get the why. Because one thing for certain, our people truly do not believe in one another, and they really don't support one another. And it's sad to say, but you have to educate people. You just have to keep educating. Like I throw stuff on Facebook all the time. When I learn something new, I will add it out there. It's up to the people to read it and take charge.
Absolutely, absolutely.
Yeah, I
A
agree with
working
that.
class spends roughly $60 a week on lunch. Now that's just lunch.
Yeah,
So
yeah, I can attest for that.
okay, so that's
I got my little budget, daily budget.
exactly. $60 a week on lunch. That's $240 a month. $240 a month. Do you think you can get a good life insurance policy for that?
I think you
Yeah,
can.
You think you can
yeah.
offer peace of mind to your family, to your children, to your spouses, that hey, I'm gonna invest, even if you take half of it, cut your lunch down a little bit, and take care of that. Finance companies are getting rich, by the way. If you invest in your life insurance policies, you can take cash out and buy stuff for cash and cut the interest out. That's purchasing a car. That's purchasing a home. All these big purchases that we do.
How long does it take for you to be able to do that though, when you got the policy?
I say a minimum of 20 years.
20 years.
How aggressive you want to be.
Yeah.
$50 a month, not gonna get it. If you put in $250 a month, you can get it, I would say, at 10 years, depending on what your investment is.
Okay.
Wow, 250 a month.
Yeah, but in 10 years, you know how fast 10 years go by? I've been in Arizona 8 years and I couldn't even believe it. So it goes fast. Imagine saving $250 a month for 10 years. What your interest and your return is going to be on that. If you put in a bank, you're only going to get 1%.
No, you can't put it in the bank these days. It ain't worth it. It ain't worth it.
So you're only going to get 1%. And what the banks do with your money? They loan it out.
Invest
they
it,
get
trade it,
capital
loan it.
investments on your money. So why don't you get the capital investments on your money? What do you think FDIC is? It's insurance. The bank's insuring your money. Why you not?
Incorporated.
Yeah. Yeah. That is absolutely true.
Put the power in your hands.
Yeah, absolutely, absolutely. And you
Power
spoke.
Power is knowledge. And then
Yeah.
FDIC is only insuring $250,000. So where do you think millionaires get their money at? It's not no bank. They got their
Yes.
monies in annuities. They have their monies in their own IRA. They're making their own money off of their money. They own the banks.
I'm taking notes right now. Hold on, y'all.
Yeah, I agree. And I mean, that's why I said, I mean, even in these days and times with so many things going on, many of us find reasons on why it would be hard. So I'm glad you gave the analogy of the lunch, on just it's just a budgeting thing. And especially as you grow a family, or even if for people who don't have a family, because in reality, there's less and less people with families now. But I always think about the assets. People have cars, they have apartments or houses that they rent, furniture, things that are important to them. And some people never think about, you know, covering these things that are important to them.
Right.
It may not be an actual child or person, but you still have things that are of value that you can put a coverage on. Or what I've come to learn is even like find a way to hold on, let me see. There we go. Or my bad, y'all. Or even find a way to bundle a lot of these things. I think having if you're working with a company and they're covering a lot of different of your amenities and you're able to get a good price and and you're able to get a kind of a home foundation for your insurance, I think that's way better than dealing with so many different companies because you have to keep up with how the company changed. One company is probably charging you more than what you really have to pay. So I think, like you said, budgeting and getting into the idea of really laying down the economics of your life will be important.
Exactly. How many
Yeah.
people roughly, and you don't have to be specific, but how many people that you know of or heard of have lost their homes because a spouse or parent has died?
Yeah, a lot.
There's a lot of people.
Now, what if they had asset protection on their home? What
Yeah.
if they had that? It would have been a paid in full home.
Now, asset protection, that's if the owner passes away, and then explain that for me real quick.
Full transparency, it's a 30-year term life insurance policy on the owner of the home. So
Okay.
if your mom purchased her home today, she would get a 30-year term policy on her life for the amount of the mortgage. So the home's worth $400,000. You get a $400,000 life insurance term policy for the exact term of the mortgage. If mom passes away or dad passes away, that $400,000 check can pay off that mortgage. But
So,
here's the irony of it. You got that policy day one for the life of the home, right? Mom or dad didn't pass away until year 20. Year 20, that house is more than half paid for, but you still got that $400,000 life insurance policy, cash coming to you. And if you can afford it, the best way is to do a return of premium term policy where if 30 years mom and dad don't pass away, you get all your money right back. You covered that asset for the 30 years and you got that money right back in your pockets at the end of 30 years.
now what do you mean if you could afford it? Like, is there a fee for doing the
It's a
return?
different cost. So like saying, for instance, I did a 30-year term policy, it may cost me $80. If I add return the premium, it's going to cost me like $130, $140.
Okay.
So it's a different cost because you are insuring that policy.
Okay. That makes sense.
Family, this has been
It's
a
a
great
true meaning,
discussion.
and you get what you pay for in life.
I want to know. I know I gotta continue to also because I'm paying attention. I'm kind of writing notes for all of the insurance stuff, but I'm also still in my mind about the investments.
So what I want you to do, CJ, write this down. It's called The Hidden Secret to Wealth with Cash Value Life Insurance by Shane Collins. The book is $7.99. You get it on Amazon.
This book. All right.
And this is it right here. I have to order some more. I don't have any more.
Okay. Well, okay.
I just started giving these books out when I do like webinars, or I do like I host events in Arizona. I'll go and do a BNI marketing spiel, and I'll give these books out to people to get quotes.
Okay.
I'm a firm believer in giving back to the community, and sometimes you have to give people something to get them to even do business with you. So $7.99 is worth it to me.
Yeah, that's not a bad investment into
And
future
I order them
business.
like 10 at a time. So you see, the last time I ordered this book was August 21st, and I don't have none left. And what
Okay.
I do is like I give them out, and then I put my logo in the book, and then I'll put my contact information. So when they read that book, I'm like, oh, this makes sense. It made sense for me. Let me call Miss Brenda and get me a life insurance policy.
Well, I know for sure that you have already been working with some of the people in the nation, and I know I'm kind of late to the party with the certain things because me and you supposed to be working together as well. So but don't worry. Soon as I get a lot of my stuff back to how I want it to be, I'm definitely gonna be calling you, reaching out, so we can get some stuff started. I'm enjoying this conversation. How y'all fellas feeling?
Yeah, it's a
Yeah, I mean,
good informational, informal, and eye-opening conversation. What was that? What was that plan you were talking about at first? What's that? Insure plan or sure plan?
Assure for life.
Assure for life. Okay, that's something I was
I
uh
can send you
taking notes
I
and
can send you a link to that. I know one of my business partners is doing a whole webinar on it Sunday at 6 o'clock. I know for our Coptic people that's doing church time Sunday at 6 o'clock. So I can do another one for you guys, or I can give you the link to this one. But I can send you the video on what Assure for Life is.
okay, I could take the video and go from there. But
What's
this
your
is a good
do you have an
combo.
iPhone?
I do.
What's your phone number?
470-885-4662.
I'm gonna send it to you right now.
All right.
there you go, live in action, ladies and gentlemen. You see, this is something that's indeed needed. I mean, like I said, it doesn't matter. I personally feel if you got a cat or a dog that you really love, whatever,
Can
as
you
you
put
get to
them
a
in
certain,
insurance?
I
you
sell
put,
pet insurance too, y'all.
yes, they do. Yes, they do.
What?
This is why I
Yeah,
say
we
it's
gonna
a
have to
help.
get them, man. President Trump just said that they got people eating cats and
Yeah,
and dogs
man.
now.
Yes,
I like
yes.
it. Yeah, man, you see it's for everybody. I mean, a lot of times we'll get older and we don't realize things until bad things happen. But and for our generation, we have to really get on the ball with this. We're getting older, a lot of responsibility is coming, so why not? And like I say, I can speak for myself. It's so much easier when a lot of the commodities that are important are kind of ran or insured by similar or the same company. Yeah, I've never, I do a lot of paperwork for my grandfather. So I've come to learn it's so much easier when the same name is coming up, or because you're able to access information, you're able to understand the policy better. It becomes like a family, it becomes like a relationship. And you don't get that with a lot of other companies, or with just having your information spread out abroad, multiple banks, this, that, and the third, when you can really set up a financial portfolio. And the one thing that, my auntie Brenda has been able to do with a lot of people over the years is be able to set them up for a financial family portfolio to kind of see where they want to go in life. And in this channel, you all know that's what we are big on, seeing where we want to go.
All right,
So
family. Let's take a quick break. We're gonna finish up with our financial guru,
Man,
and
it's
we'll
going
be
fast.
right back.